Hello, hello, hello. Happy CPI Wednesday. Forgot what day it is. It's been one doozy of a morning. So why, if you're not already following me on X, uh, at MG Arnold, let's see if anyone knows what the G stands for. You know the M, what that stands for. You know the Arnold part. What does the G stand for? So, sorry, it's been a long morning. Been up since 4. My wife's in Chicago, so I take care of everything and then sit down at the computer at 5 a.m. Nothing, nada, zilch, won't boot. Had to recover from an emergency super duper backup drive. Great product if you're running Mac, so super duper. You can boot to a secondary drive. So I got to figure out what's going on with the primary drive. All right. But man, going into a big number like CPI and not being able to get your whole computer up, and then I'm on Ninja Trader today. Ninja Trader, what time? What time is the Traders of Ninja? Let's see. I've been so kabooped. 9 a.m. Looks like 9 a.m. today. So we shall see. We shall see. But that's my time. So it's noon. It's noon today, or it's 11. It's 11 a.m. For I'm on the Ninja at 11, 9 a.m. my time, since we don't change time here in Arizona. Sorry for everybody who does know that. Jacob is gangsta. Oh, you're not. No, it's not gangsta. Although that is a good guess. You know, if I had prizes to give out, you definitely give the you get the prize. Good morning, Mark. Good morning, Patrick. Good morning, McRangers. Uh, we'll take a look at copper and gold. We can jump in there. Good morning, Jacob. Good morning, John. Good morning, Heinrich. Yes, I am running parallels to run Ninja. Yes, that's exactly what I do. So because I can run lots of OSs. So that's what I do to run the desktop version of Ninja. I can also run the web version of Ninja. Uh, but especially for the live streams, since I'm trying to show other things like the forward harmonics and everything else, the desktop version is a little more powerful. So I do run that through Parallels. And I'm running a M series MacBook 16-inch M series MacBook Pro with multiple monitors hooked up to it. Hello, Charles. All right, enough with that. Just don't know why it died. Have to figure it out. We had you got your mortgage rates came out earlier before inflation still climbing up, closing in back, getting close to that 7% again. Core inflation rate coming out up in at 0.3 in line month over month with what's expected. It was actually slightly below 0.3. It was rounded up to 0.3. Year over year coming in at 3.3. I'm not seeing inflation drop that much. Inflation rate, the headline inflation rate coming in at 0.2, that was actually rounded down. It came in a little higher than that, but inflation rate year over year 2.6, coming in roughly with consensus, but up from prior of 2.4. So that bounces. By the way, Supercore, which I had up earlier, was, oh man, I was looking at it, but everything's still discombobulated. That's going to be my word for today, discombobulated. So I'm looking at one of my other screens. I was looking for Supercore, and that is still coming in pretty hot. And that used to say changing metrics. And then you have Kashkari. You know, this headline inflation rate number shows that we're on the right path. I don't see that. How is this on the right path? Do they even look at the same data we do? And then I was looking at the markets, which is finally pulling back as it's going in the open, but the markets were rallying strong and yields were dropping off a sticky inflation. Don't understand. That's why you got to trade the patterns, not what you think should happen. You got to trade the patterns. Because, I would have thought the markets would react completely differently than they did. But the markets don't care what I think. What else we have? We got more. We got more Fed speak today. We got Logan. We got Muselex. We got Schmid. Sorry, Muselim. Can we just get rid of the Fed? Come on, please. Please. Shouldn't even be constitutional. But that's where inflation is a sticky. Good way, I'm late. Mike, is this data supposed to be bullish? That's what. Well, it's mind blowing because look at this. Look at this. Thank you for tuning in, Royal Palms. I mean, the odds went way up on. All right, this inflation data means we get another cut in December. I am just flabbergasted. I'm flummoxed. So we have Trump appointing Elon as head of gutting the government along with Vivek. So Tesla up, of course. You have Microsoft, Apple, and Google down. Nvidia up a bit. Sort of a mixed market this morning. Financials up. Let's just refresh this. Consumer cyclical real estate. Now tell me how real estate with sticky inflation and even with a slight pullback in the 10-year. The 10-year was back to what? Close to 4.4 yesterday, off a little this morning, but real estate's rallying. Home builders are I don't get, these markets are so uncoupled from reality. But you got to trade what is short term. Trend is still up. Everything positive except for technology off 2 basis points. We already went through that. And fear and greed still solidly in greed mode with most of the components being in extreme greed. But the stuff you'd want to see being up, like stock price strength and especially breadth, this is a very narrow rally again. And Schiller PE 38.29. In terms of earnings, which I did not get to look at anything this morning because I was attempting to recover this friggin' computer and at least get to where I could do the stream and do Ninja. So did not look at anything, but there wasn't anything major coming out this morning for me. After, I'm going to keep it because I've watched this since the .com. The good old Cisco. We got Beazer Homes, which will be interesting from a home builder, but it's not. None of these are market moving. Then tomorrow morning we got Disney, Advanced Auto Parts, and big one after Thursday we got Applied Materials. Then Alibaba. So head swamp drainer. Well, I want to see if they're actually going to gut stuff. Patrick's updating his dictionary. Discombobulated, flabbergasted, and flummoxed. Oh, that's been my morning this morning. Good morning, Ted. You don't get the hall pass. You should have been here on time, Ted. If my computer blew up, you should have been here on time. We'll see. All right, just remind me in a second. Just remind me. I'm attempting to get through this. So now we're back to pretty much where the S&P closed yesterday. But look at if anybody gave up in the market, like, all right, it's finally, we're getting a sell-off. Look at the last hour of trading going into yesterday. It's like it was buy everything hand over fist. Literally, this is so reminiscent of late-stage.com stuff. It's just buy everything. So here's your little reaction off those CPI numbers. Like, it was like price like, hey, inflation just dropped back to 2%. No, it went up, and let's just buy because the Fed's going to cut more. The Fed's not even paying attention to these numbers. They're not. They're just going to do what they're going to do. That's what I've decided. They're going to do it, and they're going to change it. Remember, it was now we're looking at the 3 and 6 months. Boy, your 3-month is turned back up. Your 3-month average. The 6-month is held steady. Real estate is flat to down, turning in my area. Thank you for that feedback, Andrew, because Illinois has been lagging. Illinois has remained stronger. I know that. But now it's starting to weaken a little. I remember when Cisco and Nortel used to drive my games. Yeah, back in the good old days. Be very scared. Yeah, you got to be. I agree. Reward for, I mean, you can trade very short term, but and long term and medium term, you're managing positions for mine. But if you're throwing on long term or even medium term positions in nosebleed territory, your reward to risk is is very skewed. It's like I don't want to try to make 1, 2, 3 more % to risk 20 to 30% because that's what your downside is at this point, potentially. The oh, I didn't go over my levels. If we break out, we haven't even pulled back to our daily rotation zone. So key support, if we do finally get some kind of correction and break below yesterday's lows, is about 59.70. On a rotation back up, you have very, very strong resistance around 60.30. If we get through there, 60.50 to 60.60. If for some reason this goes into launch mode, 60.85 is next. The NASDAQ. Also pay attention to yesterday's low. If we break down below there, we're looking about 20,980 to 21K as key support. Very, very, very strong resistance at 21,250. We get through 21,250, 21,340, and then up to 21,437 are the next levels. You're channeling Coco this morning. How are you channeling Coco? What comment did you make? Or are you just going to say buy the dip? Buy the dip. You know, for some strange reason, I sort of miss Coco's constant buying the dip. Although it really aggravated me. But Coco, I hope you're okay, buddy. I hope you're okay. The Dow. The Dow's been The key area I'm watching for support is about this 43.7. Significant resistance is coming right up here. The first little resistance is coming in at 44,444. How about that? Them for some numbers. Then 44,625. The Russell, the raw Russell. Keep an eye. There's a very strong support shelf right around this 2390 area, 2390, 2391. If that breaks, then we're back to right around 2378. On a move up, you see it stalled out at that first harmonic. That's still the target, 2452, and then 2481 should it go back into insane mode. VIX, no fear in the market whatsoever. DAX, finally, yesterday broke down below the lows from the 6th of November, but closed above it, now trying to follow through. So, what are our key targets for the DAX? So where I use these forward harmonics from this level, which were so far bounced today, this 18,997, so 19K, and then 18,907. So just reinforcing 18.9. And let's just see something here. The next major, I'm watching with this DAX breakdown because there's a very strong support shelf in here. You see this very strong support shelf, which closed at it yesterday. So if you close at this below yesterday, I'm below yesterday's close. I am watching for a return to the 200 simple area, which is also the 50% retracement from the lows in August to the highs in October. That is going to be a very strong magnet price from my perspective. And we're getting rollover areas, so prior support should become resistance. And the key on any rally is about 19,290, 19,300. All right, I have this on the yield too, but this is so interesting. The market's like, with stronger CPI numbers, it's actually pricing in like the 10-year weakening. But what would always put me in substantially weaker mode? We do have waning momentum and we do have cycle tops, but remember, we have cycle bottoms trying to turn up. So might go into consolidation mode. The only thing that could put me in bullish mode is a close above 110.19 and a half. Let's look at the micro yield on the 10-year. Because yesterday qualified it and today even brought it up straight to that 87 and a half. Look at that. So that makes it even a stronger double. Were it to trigger with the rotation zone potentially out of the way. Now, on a yield basis, it has to close below 4.263. So we're a long way off from triggering, but you do have a potential double against a very strong trend line. Look at all the touch points here. So the trend line, the initiating point is back from October of 23. And then we had a defining point in April of 24, and then we've tested it. I don't know if we got, yeah, we technically, this week's not closed yet, but we would have a new defining point, but that doesn't matter. It's been rejected twice from this trend line. So this is very key. But what's fascinating is that could still, if that does trigger, take us back to the first cross of weekly rotation zone and still remaining potentially above 4%, which would ease up mortgage rates just a little, but not substantially. Listen to the deal, cash and see, you're on the same page, Richard. Cash and carry, yep. Seems very thoughtful and talked about what the Fed policy cannot help like housing. Yeah, well, you know what? You bought up all the MBSs. You drove mortgage rates down to nearly 2.5% on a 30-year, and you dumped tons of liquidity in the system, which poured into housing. And now, oh, we can't do anything about it. Well, your policies ran it all up, you morons. Oh, and look, the headline numbers reinforce that inflation's in the right direction. What are you talking about? It's sticky, oh. You should all be fired because we should close down the Fed. Get rid of it. I don't even want a new Fed chairman. I don't want any Fed chairman. You know, in the 1800s, we had a Federal Reserve for a little bit, but it was only as the last liquidity. Then we got rid of that until we brought it back in 1913. We didn't need it. We don't need it. Dollar coming up, closing well above a very significant best fit line. So that's becoming support and taking out the highs, but not closing below it. So dollar might be taking a breather with daily cycles getting up there, but your key support is coming back now, right around 105. Crude, still barely holding above this. I want to see if we eke out. By the way, I don't know if anybody watched futures. I'm watching to see if this continues the slight stair stepping higher with daily cycles getting to the bottom. I am watching. Probably tomorrow, unless something happens major today, I'm going to be watching today's high. That doesn't mean it's a buy yet. Because if we break this key support, remember, the levels can easily go back down. We could easily, if we do break this key support level, see 62 in the bat of an eye. Although stuff is not resolved in the Middle East still. Gold, getting a little bounce here. And yes, we can get a bounce, but I'm watching for the continued rollover plays in gold now. Especially I'm going to be focused on to see where we sit with the right around this 25.75 level on the next rollover play. So can it bounce? Yes. If you're trying to root for more, you need it to close above yesterday's high. That would be a very short-term bounce, percent B buy. Again, I would rather be watching for the bounce. Now, long-term, does this damage gold? No. Short-term, remember how overdone it got. So this is well needed. Silver, I want to see if it makes this horizontal neckline. Copper continuing down. I am not bullish on copper in the short term. Long term, we will see. More medium to long term, but I think it needs to retest this key low area, especially after breaking what it did. We talked copper on Futures Edge too. The yen. The yen. Let's see if it's still valid. Yes, it is. It is still valid. So the only thing that gets me more into yen strengthening mode is a close on a daily basis below 152.14. Otherwise, on any pullback, I'm going to be watching for continued yen weakening. The euro, trying to find a little bottom here. And we do have a little triggered double bottom that's already hit the second target. Okay, you can see here it triggered little pullback on the 1 hour, and this was completely valid on the 1 hour. Little trigger, pull back to the entry zone, and then first and second targets hit. What else do we have? We got the spiders. Still not much to talk about there. The key support back in here is a 591, same as yesterday. We take out the highs from Monday. Still the target is 605. The Qs, again, not much to talk about here either. Besides updating a level. The Qs, the key support I'm watching, the first level key support I'm watching is 508.30, and then major support coming in about 505.70. If we take out Monday's highs, the next major target is 523.50. Bitcoin, 1 day pause. This is going parabolic too. I retweeted something about Coinbase I didn't check it this morning, but could be potentially taking out the #1 app. Retail's just rushing into this. Now remember, we could be setting up for longer term end of wave and sell cycles here. So, it would have to break down well below, but it might try to tackle that, at least get to 99 to that 100 area before running out. What else? Crypto, again, it can be traded. It should only be traded with risk assets. You still have a lot of wash trading in there. You have a lot of stuff by Tether. We need to get rid of Tether in there. And you need to get rid of, and a lot of these minor coins are completely wash traded. That's my problem with it. It's like, if anybody, I don't know, like when I was down on the floors, remember Hillary Clinton making all that money in cattle futures? The cattle futures, unless you were a good old boy, you did not engage with the cattle futures pit, because there was a lot of game playing. There was a lot of, you got to be one of the insiders. You got to be one of there's a lot of stuff going on there that maybe wasn't so, that you couldn't get away with in some more established pits. Okay? That's the way I look at a lot of this crypto space still. There's tons of wash trading going on. This is very unregulated. And then people say, well, it shouldn't be regulated. Well, you know what? It can also, stuff can, as rapidly as it goes up, can go down. Now, it can be definitely traded, but it should only be traded with complete risk assets. And at the end of the day, between the two, as a store for value, I'd rather own gold than Bitcoin. I could still, if the crap hits the fan, I can still do something with physical gold. Okay? I'm talking physical gold or physical silver. I can't if we have internet issues, or we have, I need to go to barter system. Here, let me give you some Bitcoin for your food. Well, not going to work as easily. What else? Good morning, PMG. Oh, no problem, Sterling. I hope you're feeling better today. PMG, you just pop in for Tesla? Again, this is the first reaction where I'd be watching in the short term, in the very short term, on Tesla is right about 297. And remember, the magnet price is still 375. You're welcome, Andrea. What else? What else do I have to look at? So I have to scroll back through here. VNQ. As requested. And you guys are just too good. Guys and gals. Sorry, I just use guys as a catch-all. But it is your MJ, your analysis is spot on. So it's run up here, right to that 62.5, no close above it. And that's definitely a little flag pullback with the weekly rotation zone. So the only thing that would put me bullish on a continued bull run on this, it needs to get above 99.4210 on at least a weekly closing basis. Other than that, it's trying to hold the rotation zone. But if you lose 92, I'd be watching for the bigger pullback. Okay? And if you're looking for a little key area, if you're trying to play a bullish break, this could rotate back up and set up a nice, really double top against that 62.5. However, if this area breaks, this 92 area breaks, look where the 200 is. Back at the 37.5 harmonic and the prior breakout area. It'd probably be a quick trip down there if this does not hold. Okay, so keep that in mind. But you're spot on with that. What else? Nobody figured out. Nobody else. We only have one guess of what the G stands for in MG Arnold. Jeez. Only one guess? What else do we have? RKLB. What? I'm not even. Oh, geez. Wow. That is sort of funny. Wow. I did. Okay, I did look at Rocket Lab, but I did not look at it close. So this is funny, though. So it closed above the 62.5. Telling you, that doesn't just mean you put on blind trades. It means I use that to set up stuff and take that into consideration with magnet price. So it did, look at Rocket Lab, closed above. Just curious also, when you come up here, where does that put the... So close above there, making the magnet price is 19.11. That's where it opened today. All right, but what's Rocket Lab? What is this thing? This market's gone completely insane. Completely insane into buy everything mode. Wow. And they missed on earnings, beat on revenue, but they still don't have positive earnings. And look at where this is headed. It's headed back to the bubble mania stage. We're getting everything into bubble mania territory. Jeffrey, no, it's McRanger's got it. Gordon. It is my middle name, Gordon. So McRangers, you win the virtual prize. Oh, no problem, PMG. I'm just joking with you. I am just joking with you, PMG. You're welcome, MJ. What's going on with Spot? Everything's nuts. I'm wondering. Let's see. We're going into full blown risk mode again. I mean, it's. Why can't I get that to? Oh, sometimes. There we go. Oh, closing in on the next. What is this thing now trading? I am just so fascinated by this market right now. P to E, 167. Well, you got Spotify, they're going to start playing with the video streaming, so we'll see. But again, 167 times earnings. No, thank you. No, thank you. And this is what I'm telling you. This market is just, but you got to trade it. Remember, if you're trying to trade stuff like this, to do long-term positions up here would just be insane. So why is it high? Why was the probability high for Gordon? Well, I'm curious about that, but that is my middle name. So, yeah, like these elevated times, what are these extreme valuations of PE? It's not the new norm. It's not the new norm because at some point, the market doesn't have to make sense in the short term because there is the risk premium. I mean, corporate debt is at all-time low yields. You know, your high, the crappy debt is trading with very little risk premium versus government bonds. The market's just in buy everything and don't worry about it. But I'm going to tell you something. Are we going to be at all-time multiples? All right. You know, back after the 08 thing, look at 10, got us back down to a Schiller PE in the 14s, right in the middle of a range. Could we get back down there again some point? Yeah, in the short term, could this keep going? Could we theoretically tackle 41, 42? But at some point, the money doesn't make sense. I mean, some of these companies you're paying 30, 40 times sales, not revenue. You're paying 30 to 40 times sales. And these companies aren't paying very high dividends, if any dividend at all. You're all basing it on capital gains. The market's turned into a big casino. Can it continue in the short term? Yes. Will it in the long term? I wouldn't bet on it. I wouldn't bet that this is the new normal. I would not bet this is the new normal. Because at some point, money has to make sense. And based off where 10 years are and risk premiums are, it doesn't make sense. But things don't have to make sense in the short term. And I think more people should go into Buffett mode. Still, you can do stuff in short-term yields. Look, even at 4.5% short-term yields, okay, and be liquid and waiting for something. Everything's priced in beyond perfection now. Like we're not going to have any hiccups. No, we're nowhere near a time yet to buy dividend stocks. Dividend yield is way too low, and that's across the macro. If you find a dividend stock that's been beat up, okay, that produces a good yield, that has still stable business environment, go for it. Okay? Go for it. But these dividend yields, I just want to check out Coke. because that's come off, but still, Coke's still got a P to E of 26. Okay, dividend yield is 3%. Eh, you know what? You get this down, you get this PE back below, you get this PE into the mid teens again with a decent dividend yield. I look at something like Coca-Cola. But remember, people were up here buying it when the dividend was even lower. Now, at least the dividend is 3%, but why would I take on capital risk, which this does not look like a great chart and it's not well priced? This is an excellent example. Okay? So we're still, for a company, Coca-Cola, not as rapid earnings grower, all right? Still 26, and we only pay a 3% dividend. We could easily see Coke back to 60 bucks. So does your 3% compensate you? Now, you're going to get bounces on the way. You're going to get bounces on the way. But I still don't want to touch this thing. I'd be looking right around that weekly 200. Look, we got a massive support area. I'd be more interested in possibly, let's see what's going on with Coke once we get back closer to 60 bucks. Let's get that PE more reasonable. But this is what I'm saying. Those are companies I would watch once stuff corrects again. Like this, Altera. At least the dividend yield 7% with this was a good buy a long time ago. PE 9, 7%. But would I be chasing it up here? No, we're against specific resistance. What I'm actually watching for, because we've topped out a couple times, the 87.5. If this potential double holds and then triggers over the next few weeks, I'm watching go like something like this, Altera. When this was all the way down here, okay, I got to fix something here. That's not anchored correctly. When it was all the way down here, you have a really good dividend yield with an amazing PE, even on earnings misses. At this point, it's already run, but these would be things I'd look for on pullbacks. Not here, even though this is still providing a halfway decent dividend yield. But there's not many out there like that. Good, you're in it for a while now. Just pay attention. If you're in Vail, I mean, you got your good dividend yield, but I'm going to be watching. I think Vail, we're going to get back to at least this 860 area, and then I'm going to sit up and take more notice on Vail. Just my personal thing. We already did gold dark screen. Gordon has Norman origins, and Arnold can also be Germanic, but also English roots. Plus, it rolls off the tongue better. Huh? You've done more thinking about this than me. My dad played in the farm system in hockey for the Maple Leafs, and one of his all-time favorite players was Gordie Howe. So just pay attention, and this is good things. You know what? Is this time to back up the truck on a lot of stuff? No. But there will be that time again. And those are the things you should look at for longer term. You buy a company that does give a dividend yield, okay? That does give a good dividend yield at a decent P to E, especially then you get some technical formations in here. Like if Pepsi, I'm watching for Pepsi to PE still 24. I'm watching for these to get into the teens again. I mean, I'm gonna keep watching Pepsi around 150. I think it'll get there. 150 to 137 in the key buy zone. We start getting in there. I'm going to be looking at that dividend yield with where that sits at that point with where the PE sits. And we get some longer term buy patterns. That'll be another one. Companies that aren't going away, that have been very overvalued, that have to come back down to compete with higher, longer term yields. So those are my thoughts. How good you're watching for that entry. Yeah, they're pushing GME, AMC again. The Muskegon Mohawks hockey. I think they were connected to the Blackhawks. So, what do you think of DEA? As a government agency, I think we should get rid of it. Easterly Government Properties. I actually know it's a REIT. It's a REIT. I'd be a little sketchy, careful of these still. You got to do a lot of due diligence in the REIT space. You got a lot of due diligence. At some point, these will. So it did trigger a weekly double. I would be patient on this, though. Let me just check the other numbers. You're asking, this is not one I follow. Dividend yield 8%. There's still a lot of, I'd have to look at some more of their specific holdings. This is where I do a little, when I'm doing fundamental analysis, especially in REITs, it's just trying to form a longer term base. I'd be looking at it again or down here. I don't know if this double is going to work out on this one. Because I think it was invalid. Hold on. I might be wrong. Let me do 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21. It is not valid. I misspoke. That's where that rule of thumb, I should have just done that on a monthly chart. That's where it took too long before it triggered. So I would be waiting back around this 11.25, 11 mark and then reevaluate that one. I'd be real careful on a REIT that rents the government at this point. So, all right, I'd be looking, especially if they can actually start gutting this government. We need to trim the size of government down by 60% at least. You know what? That's my thoughts. A lot of people doing a whole lot of nothing. So would you want to have a REIT that rents the government? You know, don't. I just watch his live streams. Is Roy Kitty's? I don't even know how high he is to judge the company. I don't know. I mean, AMC. Are people still really trying to do something with this garbage? I mean, come on. It's another one. I bet you the next significant downturn, AMC's gone. GME's another. Are they just trying to ignite another one of these vertical up, vertical downs? I don't know. All right. All right, I gotta make sure everything's good to go with. Sorry for going so long today. I gotta make sure everything's good to go with my Ninja setup. I'll be on there in an hour and 10 minutes. So if you want to join me on Ninja Trader, please do. Gold was good until news came. Which again, we're in and now. The thing is, on any bounce, watching for rollovers. We should still get some further weakness in gold. With that, I shall talk to everyone tomorrow. Unless you see me on Ninja Trader, then I guess I'll talk to you then. I remember tomorrow, by the way, tomorrow we have jobless claims and PPI and more Fed speak. Yay! And then Friday's retail sales. So we'll see if any other prints come in with sticky inflation. Even though PPI isn't as major, I want to see how that prints with potentially sticky inflation. You're welcome, Andrea. You're welcome, Jake. AAP's tomorrow. Let's look at AAP. Yeah. I'm watching to see because this could get very interesting. I haven't updated my chart here for a while, but advanced auto parts. We could be getting back into a very key bottoming area on this. All right. So just going to be paying attention to this. Going to be paying attention to this because right around here is a very long-term potential bottoming area. So I want to see how it even if it pops up tomorrow, it'll still give many opportunities, but I want to see what they do with earnings tomorrow. All right. See, good day to you too. You're welcome, Ted. I'll talk to everyone later. Bye for now.